bid you all good morning, good evening, and good night, and thanks for tuning into the transmission. This episode's called Inflation Control Mode. What is happening? Well, let's take a look at some headlines and kind of connect the dots and try to figure out what is happening. So here it is. American inflation shoots up 2.6%. This is from The Economist. Kind of went through this. It makes a lot of sense. And this part right here basically states it all. It would be wrong, however, to dismiss the rise in inflation as a mere mathematical quirk. America's economy is emerging from the pandemic downturn at great speed as jobs return and vaccinated consumers start spending, right? That's the key. Consuming is the biggest branch of American GDP now. It's no longer exporting and producing and fabricating like it was back during World War I, right, and World War II. In March alone, prices rose 0.6% compared with the previous month, the fastest pace since 2012. And that's the key right there. The fastest pace since 2012. If you remember, if you look at the chart from 2012, you know what I'm talking about. So basically, somebody emailed me the other day saying, Mike, what's the whole big deal about inflation? Everybody's talking about inflation. Inflation might hit. What does that mean? In the simplest terms, you're paying more for less. That's all. You're paying more for your gas. You get less for what you got back. You're paying more for your coffee. You're paying more for everything. And there's hidden inflation in food where you would buy a bag of chips and 80% of it's filled with air, or you would buy your cookies. I looked at chocolate chip cookies, Chips Ahoy, the other day. They're like little Crispix now. They're like the cookies went from this to this. So it's a lot of hidden inflation. There's a lot of Mickey Mousing. And what do they do with the other products that it's kind of hard to hide food inflation? Well, like I'm scared what they add to the milk or what they add to even bottled water or whatever they add to what, just to make that gap fill so you feel like you're getting more for your money. Realistically, you're not. That's why you should start reading the backs of bottles, ingredients, and finding out what you're eating and consuming. Inflation Watch, U.S. consumers price boast, biggest jump in 8 years. So there it is right there. Consumer prices in the United States in March posted their sharpest rise in more than 8 years as vaccinations increase and the economy reaps the benefit of massive government spending. So again, I'm afraid that America is going to have to... Okay, so let's go to this key part here. Let's go to this key part right here. U.S. added 916,000 jobs in March, but the COVID uptick may offset gains. U.S. economy healing but not fully recovered, says Federal Reserve Chief. Upbeat on U.S. economy, Yellen and Powell say more must be done. U.S. Congress approves $1.9 trillion COVID relief bill. So nearly half of the gain was due to climbing petrol prices, which rose 9.1% in March from the month before. So how is America going to combat with this, or how is America going to start to fill its coffers again, or get something off the ground? Well, they're going to start doing the carbon tax. Canada's got the carbon tax going. Canada's fully carbon taxed. I have my gas bill here. I paid $140 for carbon tax last month to heat my home. So America's going to fall in with that. Amerifornia, that we've been talking about on this channel, will be coming. So Amerifornia, you'll start to see unemployment spike. You're going to see the price of real estate go 17, 18 times the average income, depending on what city you're in. You're going to see Amerifornia go nuts. Homelessness everywhere. Fentanyl crisis, opioid crisis, plaguing the youth, young families falling apart. It's going to basically, America's several years behind Canada, Australia, New Zealand, and the UK. So Amerifornia will be coming. All right, let's go here. This is a good one by Journal Pioneer. They actually hit it on the head here. World stocks hit record high as bond yields ease with inflation fears. So it looks like reinflation is not going to be necessary. Raising interest rates may not be necessary. It goes here, the 10-year Treasury yield has surged from the start of the year to a 14-month high of 1.7776% on March 30th on bets of a massive financial stimulus would speed up the U.S. recovery, stoking faster inflation than the Fed policymakers anticipated. So things go up, things look bright and dandy, because they're betting. They're like, okay, let's bet on the stimulus. Let's see what we're gonna get, and let's see what we can walk out with, or let's see how much of a gain we could get. Gold price is pushing higher as U.S. inflation heats up. So there it is right there. In a delayed reaction, the gold market is seeing a renewed bullish momentum as consumer prices pressure picked up in March. Come on, let's rig these markets. These guys, these market riggers and metal spoofers, you're dropping the ball. Realistically, on this channel, we've been talking gold should be anywhere from 4,600 to maybe like 5,100 an ounce. Easy. If you want to hedge it against what inflationary levels we are at right now, gold should be easily in that range, and silver should be 300 to 400 an ounce. So I just don't see like why things are not in correlation. Look at the housing. We'll look at housing in a few minutes, and you'll see why. Gold is in the same situation housing is in, right? Where it's the reverse. Where gold stays down, inflation runs rampant, and they manage to manipulate that as much as humanly possible. And that's why Bitcoin's been picking up a lot of steam lately. Here it is. Simple math is about to cause an inflation problem. This is from today's date. Year-over-year comparisons will appear large for a host of economic indicators in coming months. In the U.S. and for that matter elsewhere in the world, after the pandemic-related business shutdowns curbed activity during the same periods in 2020, but arguably no data point is more in the spotlight in front right now than inflation. Inflation is a big deal. So it goes into the side effects and while prices soon began picking up, the year-over-year increases for March-May will appear abnormally large as the upcoming figures are compared to very low readings of last year. And then it goes in which figures would impact. Obviously, the CPI. The CPI, which was up 1.7% in February from the prior year, is weighted basket of consumer goods and services. And it goes into what's the worry. The outsized numbers will come on the heel of $1.9 trillion pandemic relief package signed by President Joe Biden, President-elect Joe Biden, and in the midst of an intense debate about the path of inflation, economists and Fed officials have warned about illusionary readings expected due to the base effects. But what likely won't stop some from viewing the figures as confirmation that inflation is surging. That was the key part I wanted to take away from that. Let's move on here. Here's the price problem, inflation metric poised to jump after being depressed throughout pandemic. So now, I've been trying so hard on this channel to prove to you guys that we had a problem in 2019 before the pandemic. Business shutdowns, housing prices going out of control, cost of living going up. This was and job losses like crazy. We already saw this happening, and if you look really carefully at this graph here, let me zoom this in for you guys to see. It kind of depicts it right at the beginning of the so-called pandemic, but if you see here, I think economists knew they were in for something because the outlook wasn't looking good. Canada was losing jobs like crazy, and then you're going to say, well, Mike, I pulled an article from the date you were telling me in 2019. It looks like Canada added 40,000 new jobs. Those were all public sector jobs, not private sector. Any government could throw up 40,000 jobs overnight and hire a bunch of, not even pencil pushers, just people roaming around working for the government. And that's what they did in Canada. All right, Canada's federal deficit hit $268 billion in January. You got to be kidding me. This is huge. So this is from late March, and it goes on to say right here, at the same time, revenues were $235.8 billion, $40.5 billion drop from the same period 1 year earlier as tax revenues and EI premiums decreased and the Crown corporations reported lower profits. Public debt charges fell 17.2 billion compared to 20.2 billion 1 year earlier, largely reflecting lower inflation and interest rates. And the end of January, net federal debt was just under 1.09 trillion. The Fiscal Monitor released Friday will be the last budgetary update before the government tables a budget for April 19th. It's first since March 2019. So I'm looking very forward to this budget. The federal government says it ran a budgetary deficit of 268.2 billion through 10 months of its fiscal year as the Treasury pumped out more pandemic aid. So there it is right there. So let's move on here. So Canada's been spending a lot. Government's been spending a lot more than what they're taking in, and this is becoming a massive issue. Get ready for higher grocery bills for the rest of the year. This is coming out of the United States. The latest spike in grocery bills comes on the back of prices that rose during last year's pandemic stockpiling and never went down. So there it is. Shoppers had better start budgeting more for their groceries, according to the latest Consumer Price Index, which shows prices are increasing and they're likely to keep going up. The monthly Consumer Price Index released on Tuesday. I did take a gander at it. Tuesday morning by the Bureau of Labor Statistics showed a 0.6% increase in March, the largest one-month increase in nearly a decade. Over the past year, prices have increased 2.6% overall. Gas skyrocketed 9.1% last month since February. Prices of fruits and vegetables have risen nearly 2%, and the index for meats, poultry, fish, and eggs have risen by 0.4% according to the government figures. See, in Canada, it's a little bit different. Pork, meat goes up by 7%. Doesn't go up 0.4%. So America's still, they're trying to really work this number. I don't know if they're going to do another Operation Twist or Operation Meltdown, or what are they calling it this time? I don't know. This was sent to me from Sudbury, Ontario. Sudbury gas at 128.9 today, but we could see a Tuesday price spike. So there it is, $1.28. I think that's what they mean for the gas, and $1.12. Wow, the gas cost in Hispaniola, and so the price of gas keeps going up. 128.9. That is major. That is major. Cost of gas increasing in Canada. I've seen it go up in my town too, about 25 cents a liter. Let's move on. Toronto real estate prices rise more than half the median wage in a month. So if we're not in massive inflationary territory, for the price of a house in Toronto to go up half the median wage in a month, not 2 weeks in a day, so not 2 years in a couple of weeks, a month. This is the average home price back in the 80s and 90s would go up half the median wage in like a year and a half, 2-3 years. Now it's going up more. Now let's tie that article into the next article that they have on Better Dwelling. Canada says property bubble not good for locals, but good for foreign investors. Foreign investors are just making bank here in Canada. They own so much of our properties. Our condos most of them are left empty. They own majority of our stock. I think they own a lot of our farms now, and there it is there. Canada will not let home prices drop by 10%. So the government refuses to let prices drop. So why can't we see it? Why are they not allowing a correction in Canada? Why aren't they allowing us to see a correction? Why aren't they allowing our kids? No one makes anywhere near enough money, $1.8 million, to get into a tear-down home that was built after World War II. Canada doesn't have the cities like America does. Canada is in a lot of trouble. So is Australia, New Zealand, and the UK. I'm not leaving you guys out. These countries competed for wealthy investors. And now we're screwed. Okay, technically we're doing okay, but we're not. On paper, the news make it seem like it's the greatest thing that ever happened, but it's not, right? So I'm going to look up at an article. Here it is. This is the article I keep bringing up, and this is one that needs to ring loud and clear, especially to Americans out there. There it is. Canada would have been in a recession without money laundering, and this is how much of the billions, 200 billion. That's our deficit. That's what we spent. into money laundering into Canada. That's what they've caught in a couple of years. So we're looking at over 100 plus billion right now. 1 trillion, 1.2 trillion from 2011 to 2021. So that's what's happening, and that's what's keeping Canadian recession going. Canadians will pay for Trudeau's government's record spending. So keeping housing prices high, keeping the cost of living high, and not seeing a correction in the markets is actually Canadians will be paying. And that's why Canadians are looking for the next exit out. A lot of Canadians are looking for their next exit out of Canada, especially professionals. A lot of them are emailing me left, right, and center, inquiring to get the hell out of Canada, and a lot of them with pensions, or a lot of them that have done their dues in the country and said, you know what, I just can't live in this country. I can't afford to live in this country anymore. And that's usually war vets, workers that have been, working pretty much 40, 50 years of their lives, are having a really tough time making ends meet. And that's what's been happening. So again, the government of Canada keeps saying that the budget would balance itself. So it goes on to say right here, in 2019-2020, federal program spending rose further, setting a new record of $9,320 per person before any COVID-related spending. So this was happening way before the pandemic, because this was happening before. And then it goes on to say here, but spending through borrowing, this government is effectively sticking future generations with the bill for today's spending. And how far future generations are we looking at? We're looking at anywhere to fix this problem we're in right now. Okay, I don't think they're going to be fixing the housing issue any soon. I think housing will go 3, 4, 5, 6, 7 million for a detached home. Nobody could afford it. And the people that do sell, like the Canadian proper that sells, they're just going to, like a lot of the Anglo ones are going to just move back to Europe. I know of a gentleman that I spoke to where his great-grandmother was British and he's getting citizenship to move to Ireland. I spoke to another gentleman whose grandfather was German, and he's just going to move to Germany on a farm there in Germany somewhere in a small town. And they're trying to get citizenship now, and now European countries are giving citizenship. I think Portugal is going up now to great-grandparents. If you had great-grandparents, Portugal's going that far back. Spain's going to great-grandparents too. They want basically that you sell your homes there, come back to the homeland, come back and die in peace, right? So this is a big one here in the news. Here it is right here. Toshiba CEO stepped down, raising doubt over buyout offers. So we're going to see huge merging, acquisitions, all kinds of stuff is going to be happening in the near future. Oil rises on signs of U.S. inventory drawdown. OPEC bullish. So I got quite a bit of oil stock and picked it up when it was dirt cheap back last year. Oil extended gains in Asian trading after industry reported pointed to another decline in U.S. crude stockpiles that followed upbeat assessment of demand outlook from OPEC. Futures in New York rose 0.7% after advancing 0.8% on Tuesday. The American Petroleum Institute reported crude inventories fell by 3.61 million barrels last week. So there it is right there. Brazil. Now, Brazil. Central bank pledges to stop core inflation contagion. So I was looking at this and I was watching the news in Portuguese and trying to figure out what they're trying to say there on that end. And let me go to okay, here it is. We understand that this process had some contamination in the core inflation numbers. Campos Neto 51 said Bloomberg TV interview late Tuesday. We keep vigilant on how this process is developing. Brazil's central bank is trying to put a lid on accelerating inflation without suffocating the recovery of Latin America's largest economy. It's an especially delicate balance to strike as the nation reels from the world's worst COVID death tolls, blah, 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 blah. At the same time, the investors are fretting over faster spending and populist inclinations of President Jair Bolsonaro. So here it is, guys. A lot here. I got report from friends living in Brazil, and they were telling me that they're having a lot of people are converting their money into U.S. currency, gold, silver, and crypto. So a lot of friends I know personally on a personal level in Brazil messaged me and they said, Mike, I'm just buying some gold, man. We got some good gold here in Brazil. They got good minted gold. And I know the Bank of Portugal has bought several tons of gold from Brazil in the last, I think, 2 quarters ago. So very interesting to see where or what people hedge with or what people are going to. You could see a Venezuela breakdown in Brazil. You could see that very easily. It doesn't take much for it to happen. Because they don't have a world-backed currency like the U.S. does. So the U.S. can let it go like the Roman Empire. That's the difference. Someone asked me that question. Mike, how come Argentina reset their economy 3 times, or they reset their markets 3 times from zero and still keep crashing? Well, they don't have the world reserve currency like the U.S. does. The U.S. would be considered as the Roman Empire in its decline. Now, as it falls, it could take another 100 years for this to erode and fall apart, right? So we will be seeing war very soon. So make sure you pick up some oil stocks, because I have a feeling we'll be going to war real soon. Australian household to spur growth as sentiment at 11-year high. Let's say that again. Australia's household to spur growth. Again, Australian households are set to keep driving up the economy's recovery, brushing aside the withdrawal of fiscal stimulus with the expiry of the JobKeeper wage subsidy as confidence soared to the highest level in 11 years. Consumer sentiment surged 6.2%, 118.8 points from April, a month earlier. Westpac Corp. Westpac is under investigation for $21 million independent fraud of money, individual, 21 individual times it broke the law with money laundering. So, said in a statement Wednesday, the index is now at its highest it's been since 2010. The economy was in its post-2008 crisis rebound at the peak of mining investment boom. So here it is right here. Clearly, confidence would have been buoyed by positive news around the labor market. Now, so what they're trying to do here is they're trying to do everything humanly possible to not have to raise interest rates. So they do not want to reinflate the markets, or deflate the markets. So by raising interest rates. So all these countries are going to do what they can to keep this going. Whether they're going to have to print more money, devalue their currency. Remember, Australia doesn't have a world reserve currency either. So they're playing with fire, and especially when they're very heavily dependent on housing in Australia to prop their GDP. And people are at awe when they see the numbers. It's like, wow. But the mining's doing well in Perth. But who owns these mining companies, right? Is it the Chinese? I know the Chinese own a good portion of Australia now. They're basically rolling out the 5G in Darwin. We covered a Mike in the Night 5G in Darwin. 5G social credit score that a bunch of city councilors or city council in Darwin went over to China to look at the technology for the whole social credit score in Darwin. We covered that here. We covered that in depth here. This is major. So what are they going to do? How are they going to keep their protests are out of control? Every city in Canada is in protest every weekend, and people are saying enough is enough. It's time, stop telling us what to do. I'm a law-abiding citizen. I work hard. I pay my taxes to the big tax man. I raise my family. I do what I got to do, to take care of my family. And you know what? We don't want to be told what to do. It's getting old. It stinks. Start arresting the criminals. Start putting the criminals behind bars. It seems like people that are out doing bad are just getting another 3, 4, 5, 6 chances. Anyways, let me know what you guys think in the comments below. I look forward to seeing your comments on what you guys think about this inflationary demise we're headed towards. I think we're going to head towards not hyperinflation, but I think things will get out of hand where they're going to have to start raising rates in suit with rising inflation. Mike Martins here. Thanks for watching. I have spoken.